Welcome to the company presentation of Media and Games Invest. My name is Paul, CFO of MGI, and I will guide you today through the company highlights. And starting here with the shareholdings of Media and Games Invest, we can see here Remco Westermann, our CEO and chairman, who started the story in 2012, still holds 28% of the company, followed by Oaktree and Janice Henderson holding 9% and 3% of the company, and then a very strong free float of institutional investors from Scandinavia, United Kingdom, but also US holding 60% of the company. And therefore, we have a very strong access to equity capital markets to really drive and finance our organic buy and build organic growth story. Coming now to the business overview of Media and Games Invest. So what are we standing for? It's a clear buy and build organic growth story where we have done more than 35 M&A transactions since 2012. We have a market cap of more than 900 million euros and $1 billion US. We are listed on the Frankfurt Stock Exchange and Nasdaq First North Premier Stockholm. We have more than 900 employees worldwide, and we run the company in two segments. It's a game segment with long-term games revenues, as well as a media segment with a focus on long-term software as a service revenues. On the game segment, we have more than 10 top multiplayer games, more than 5,000 casual games, and serve more than 100 million registered gamers worldwide. On the media segment, we have delivered more than 166 billion ads on the last 12 months basis and served more than 5,000 advertisers in the last 12 months. On the key revenue splits, we see that North America with 63% is now by far our biggest market, followed by Europe with 24% and Asia with 7%. On the revenues by segment, we see that the revenue split is quite equal, 51% on the media side, 49% on the game side. And on the key financial development, we see that we have been on a very strong profitable growth track in the last 6 years, reaching 193 million revenues and 45 million EBITDA in the last 12 months. So why do we combine media and games? There's a very clear cost, data, and revenue USP to do that. So on the left side, we see a gaming standalone company where a typical gaming company pays 15 cents per install per user and can generate a 2 euros ad income per 1,000 ad views, which means we need 75 ad views to be break even. While on the media and games combined company, you pay 10 cents per install and can generate 4 euros per 1,000 ad views. And therefore, you just need 25 ad views to be break even. And that is driving a high efficiency. Efficiency is 200% higher than on a gaming standalone company. And that is really driving our profitability and organic growth of the Media and Games Invest. Coming now to the media and games overall addressable markets. Here we see on the left side that the digital games and digital media market has a market volume of roughly $500 billion US and is expected to grow by 12% to more than 700 billion until 2023. And what we can see here on the right side is that the organic growth was 36% is 3 times higher than the market. And that is because of the combination of media and games in one group. Coming now to the segment overview of games. And here we see on the left side that we have more than 10 top MMO games where we own the IP out of 8 of these games, which means we don't need to pay 25 to 30% license fee to an external developer, driving a higher profitability, and can also do a lot of with content updates to drive further organic growth. On top, we also have, that's what we see on the right side, more than 5,000 casual games, where more than 80% of the revenues is coming from own IP revenues. So what is MGI standing for, and what does it mean in terms of recurring revenue streams from games? That's what we see here. Most of the games are actually more than 10 years old, while we actually still can drive organic revenue growth to content updates. And what we see here is a revenue profile. So more than 50% of the revenues is coming from players more than 5 years in the games, which means very recurring revenues and a high predictability and very strong underlying cash flows for these games. Coming now to the media segment, and here we see our ad tech platform, which is active in more than 20 countries. It's full stack and self-serve, and we have a very strong portfolio of desktop and mobile marketing solutions with a very strong focus on software as a service, and serve more than 5,000 publishers, which are connected to the platform to monetize their in-game advertising space. And they're, for example, connected to our supply side platform, which is driving 76% of the media revenues, while 12% is coming from the demand side platform where advertisers go to and look for certain users. 7% is coming from the performance platform and 6% is coming from the influencer platform. Which is really outstanding is the software as a service part. And that actually is the 76% supply and 12% demand side platform. And here we have a retention rate of more than 95% of our software as a service accounts. And on top also added 21% new accounts in the second quarter of 2021, which means existing clients stay, while we're also adding substantial new clients to the platform and therefore drive substantial revenue growth. How the platform looks like is what we see here. So MGI serves the full ad tech value chain from the advertiser through the demand side platform, data management platform, supply side platform to the publisher, which means the advertiser can put a certain profile and user which he looks for into the demand side platform. And we then, via our data management platform, can actually request this user at the supply side platform where the publisher is connected to. And this value chain allows, in the end, the advertiser to do efficient targeting for user acquisition. And it allows the publisher to generate as much as income for the in-game advertisement space as possible. Coming now to the ESG part, and here we have actually also issued a sustainability report for the first time in 2020, and to talk about a few achievements which we had in 2020. So we planted more than 200,000 trees together with our gamers in the rainforest, and have also together with Planetly achieved a carbon neutrality already for 2020, and also work on a lot of different other projects for the upcoming period. Coming now to the strategy of Media and Games Invest. And here we concentrate on a very clear buy, integrate, build and improve strategy, buying mainly inefficient targets which are too small, and then bringing everything via integration on our platform and make them more efficient on the cost side. And then as well, build and improve, increasing organic growth of these targets. And therefore, for example, on the game segment, adding new users to the games, internationalizing the games. Well, on media targets, actually, we also then sell these products globally with our more than 20 local sales offices. How does the M&A strategy of Media and Games Invest look like? So we have actually two things which you concentrate on. On the one hand, that's more the past. Actually, we concentrated on EBITDA negative cases where we always wanted to earn back the purchase price, including transaction cost and the burn rate within 24 months, and have been historically actually be rather below 18 months. While on the EBITDA positive cases, we wanted to not pay more than 6 times EV EBITDA, including synergies, which means like on the latest Smartware acquisition, we also can pay 10 to 11 times if there's very clear revenue and cost synergies that we can bring the company to a more 6 times EV EBITDA multiple. How do we achieve these multiples is actually due to the typical target size where we focus on, which is 5 to 40 million. And therefore we don't focus on much bigger targets and therefore staying away from the bidding processes and can achieve these multiples. How does the integration of a company looks like? And that's what we see here. One example is actually that we also fully integrate the tech platforms. So we move everything from historical data centers more to our cloud technology, where we have one framework contract for the full group. And then for a gaming company like Trion Worlds, the acquisition, we actually reduced tech costs by 74% post-acquisition. And on a media company, for example, Verve Group, we reduced the tech cost by 57%. And that is in the end really increasing the EBITDA for the full group. Here we see a case study. The case study of Trion Worlds was actually an EBITDA negative case. So we actually acquired the assets from the banks, which called the secured loans. First of all, we increased the rentability by moving everything to one platform. We had the company already profitable after 3 months. Then we optimized the assets. We're adding much more content updates. We launched also some games and then achieved already organic growth of 24% in the second year post-acquisition. And therefore, we're driving very strong profitability of 7 million in the first 12 months already. And then in the next 12 months, already 9 million EBITDA. And therefore had a payback time for this company of less than 2 years. Coming now to the financial performance of Media and Games Invest. And here we have shown very strong profitable growth in the last 6 years, reaching 193 million revenue in the last 12 months and a 45 million EBITDA and an average growth rate of 78% since 2018. And what we can see here as well is that the organic growth is quite strong, with 36% in the second quarter, and has also been the enabler by achieving a higher growth rate from 2018 to the last 12 months, Q2 2021, than in the years before. And we have also increased actually the EBITDA margins after a dip in 2019, where we also acquired more media companies, which by their nature have a lower EBITDA multiple or EBITDA margin, which we then now, due to economy of scale, have increased and expect actually to be already between 25 and 30% by end of the year. Looking into the second quarter revenue and EBITDA development, and on the left side, we see that the revenues have increased by 90% to 57 million revenues now. That was contributed and achieved by both segments, while we actually saw all-time highs in the second quarter, despite a very strong second quarter last year, where we saw a strong revenue spike due to the COVID lockdowns, where a lot of gamers entered into our games and drove very strong revenue growth. While on the EBITDA side, we grew the EBITDA even stronger by 127% and achieved all-time highs with 50 million EBITDA in the second quarter, and have also been able to increase the EBITDA margin by 5% from 22 to 27%. And that's actually achieved due to a lot of economy of scale. So the personal costs and office costs, these kind of things were relatively stable, where revenues were scaling up, and therefore we increased our overall profitability. Coming now to the segment performance, and here we see on the left side the game segment, which has grown with 49% year on year, reaching 28 million revenues in the second quarter. Also, the EBITDA margin increased from 29 to 38%, and that was achieved due to M&A transactions, large content updates in the existing games, as well as an increasing part of ad revenues in our games. Well, on the media side, we actually saw an even stronger increase in revenues of 159%, reaching 29 million revenues, and increased the EBITDA margin from 11 to 16%, also due to economy of scale. So the revenue scaling quite massively, while the fixed costs are relatively stable. So we're also going into higher EBITDA margins here. We actually expected 15 to 20% for the second half year, and have achieved 16% already in the second quarter, and therefore there's more to come also in the upcoming periods. Looking now into the operating cash flow and capex development. So on the left side, we see the operating cash flow has developed quite strongly to 33 million on the last 12 months basis, with a very strong underlying free cash flow of 26 million. The free cash flow conversion is achieved as we have a very limited maintenance capex of just 7 million on the last 12 months basis. The reason for that is that we just do further development of our IP-owned games and don't take 5 to 50 million investment risk to develop an MMO game fully from the scratch and then launch the game, and therefore rather on further development and content updates of existing games. And if we launch a new game, then we buy a game license from an external developer who took the investment risk, and therefore driving a more capex light business model here. On top of that, we actually have expansion capex, which includes the investments into M&A transactions, but also investments in new game licenses, and therefore driving a very strong free cash flow conversion. Coming now to the risk profile of MGI, so the net leverage development. And here we see that we have delevered pretty fast from 7x in 2014 to between 2 and 3 in the last 5 years. And we actually reached a net leverage of 1.0 times on the last 12 months basis. As we did already in Q3, another acquisition, which is the Smaato acquisition, we had a cash out of roughly 100 million. And therefore the net leverage increased on a pro forma basis to 1.9, but it's still within our net leverage target range of 2 to 3, and therefore quite conservative actually for a company. Coming now to the outlook of MGI Group, and here we see that we have issued an initial guidance for 2021 of 220 to 240 million revenues and an EBITDA of 60 to 65 million, while we updated already the guidance, including Smaato, to 234 million revenues and 254, and an EBITDA of 65 to 70 million, which corresponds then to a revenue growth rate of 67 to 81% and to an EBITDA growth rate of 123 to 141% year on year, which shows already that we now going into higher profitability as the EBITDA is growing faster than the revenues, which means a lot of economy of scale and also an increasing EBITDA and EBIT margins over time. And that brings us to the end of the presentation, and I would like to thank everyone for listening in, and stay tuned.
Hi there, since you watched this company video until the end, I'm guessing you liked the video. and that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.